Amazon just reported earnings. The stock is up 12% in the after hours. Us as Amazon shareholders have been struggling for over 2.5 years. The stock has done nothing and it's finally going up. And many of you hope that it's sustainable. I believe it's going to be sustainable this time. It's way overdue with the stock only being up 1.5% versus Google and Nvidia and most of the big seven being up 40 or 50% this year. And that's why I told you guys the stock was too hated. It was too cheap to ignore, and I've been buying dip on the stock. It's so far paying off, but we'll see what happens tomorrow. It could change within 2 or 3 minutes. You never really know. But in terms of the earnings report itself, it was amazing, absolutely amazing. They beat on sales, they beat on earnings per share, 195 versus 157. That was a massive beat, guys. Sales, or I should say AWS, was a massive beat also. And Q4 guidance, they also beat on guidance. And expectations were so low for Amazon. But most importantly, AWS, which people have been saying it's dead and it's falling behind. And I've been telling you guys it's not falling behind. It's a matter of time. Whenever they integrate a lot of things within Anthropic and the data centers come online, AWS is expected to reaccelerate. And this is exactly what happened. But it reaccelerated beyond what I was expecting. And now it's growing 20%, from 17.5% to 20%. So the trend is heading into the right direction. And the CEO himself, he said AWS is growing at a pace we haven't seen since 2022, reaccelerating to 20% year on year. We continue to see strong demand in AI and in core infrastructure. And this is what sent the stock up 10%. It's pretty amazing. Now, 20% growth is amazing, but if you compare it to Google Cloud, which grew 34%, and Azure, which is growing 40%, 20% isn't really too impressive. And this is the main counter argument against the cloud business of Amazon growing. But what I always say is that AWS is the biggest. I mean, we just had the outage like 2 weeks ago and half the internet shut down, guys. It wasn't really good for Amazon, you could say, but it really shows you how dominant Amazon is. Robinhood stopped working, and most companies and websites, they just stopped working just because AWS shut down. So you could see the market share of the AWS. It's 30%. Azure is 20 and cloud is 13, Google Cloud. So once you have a smaller share and smaller numbers, it's easier for you to grow those numbers. You're going to grow them at a faster pace. But if you have a 30% share, it's really hard to maintain 40 and 50% revenue growth. But I'm very happy to see AWS reaccelerating. It's headed into the right direction, and it should get better as Anthropic is going to grow over the long term. AWS is going to grow with Anthropic, and this is really, really amazing. Now, something that a lot of people don't talk about is the advertising side of Amazon. And advertising has also been reaccelerating from 17%, 22%, 23%. Massive reacceleration. This is now a $65 billion annual run rate kind of business for AWS, and is growing for Amazon, and is growing at a 24% CAGR. So I really like the advertisement business of Amazon, but I believe Amazon is much more than advertising, and it's much more than AWS, which everyone loves talking about. I always said that the robotic business and the robotic and automation potential for Amazon is not even priced in the company. So we're buying Amazon for AWS and for the advertisement business and for the online store and maybe for Whole Foods, but we're not really getting anything within robotics. I believe we're getting the robotics and automation segment for pretty much for free. And Amazon plans to replace 600,000 workers with robots, I believe by 2028 or 2030. And this is their latest robot that they've been working on. And Amazon Robotics are one of the most advanced robots in the market, and they're saving Amazon a lot of money. That's why gross margins of Amazon have been expanding, and they will likely continue to expand. And if they decide to license the technology to other players, they can collect hardware revenues and also recurring revenue from software and maintenance to other companies. So you could also have a potential robotic business, which is not even priced in Amazon. And I love this as a call option within the company in general. And with Amazon, you also have a logistics moat which really cannot be disrupted by AI. It cannot be disrupted by a new competitor that wants to come in and overtake Amazon. And you could look at Amazon's logistics mode, or I would call it the physical mode, versus, let's say, USPS and UPS. Amazon Logistics was like a 1% market share. Now it's 28% of total deliveries in terms of parcel volumes are through Amazon Logistics. It overtook FedEx and UPS, and it's about to overtake the United States Postal Service, guys. I mean, the business is amazing, and this is a physical mode that cannot be disrupted. Now, many of you guys remember my video about considering selling Amazon, which I haven't sold. I even bought a lot of shares of Amazon, but it was mainly due to the decline in operating cash flow growth. It was declining a lot. Well, this quarter, it has grown 28%, and operating cash flow growth is massively picking up. This is a very good sign, and I hope it sustains itself, because this is a metric that I'm watching closely. But if I'm looking at what I'm paying for Amazon over here, I'm paying around 15 times price to operating cash flow. 15 times is nothing, guys, for a company that's expected to keep growing operating cash flow 21% in 2025, 21% in 2026, and 20% in 2027. So I'm not even paying 1 times price to operating cash flow. So I believe Amazon should be trading at least 20 to 22 times price to operating cash flow in the short term. So I believe Amazon has about, you could say, another 15 to 20% on the upside from the 10% moves that we had today. And from then, I would see at least a 20% annual return. So I believe Amazon was too cheap to ignore. I think the robotic business was not priced in. The report was amazing. I hope the price action sustains itself. I believe it is. But if it goes back down, I would be a happy buyer to buy more of the stock and average up on my position and build it as a long-term investment. But I hope it sustains itself, and I think it will. And if you're interested in the charts of AWS growth and the advertising charts that I showed you, you could check out the link for Fiscal.AI. They give you 2 weeks of free access if you use my link down into the description. Most companies don't have those charts, and I find them very helpful at tracking those metrics for Amazon and Google and Microsoft and many companies. But that was my opinion on Amazon. It was not financial advice. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.